At that time, there were two solutions to the problem. And here we get back to the two basic ways to distribute the wealth or the income or the purchasing power produced by an economy. We could have solved the problem via Route 1, to each according to what he produces. Or we could have solved it via Route 2, to each according to his need. Now here's how we could have solved it via Route 1, to each according to what he produces. We should have recognized that capital, not labor, was producing most of the wealth, and that with automation would produce even more of it. We should have recognized that capital ownership was highly concentrated when roughly 2% of our families own most of it. We should have realized that to each according to what he produces simply won't work unless everybody has a chance to own some of the thing that's doing most of the producing, namely capital, or the tools of production. Thus, our goal should have been broad ownership of capital, to include virtually every family in America. We should have devised ways and means to make this possible. Then, and only then, could we have upheld this principle of private property, which says, if you own it, you should get what it produces. But we didn't think it through. We persuaded ourselves that human rights are more important than property rights. Forgetting the 8th commandment, thou shalt not steal, the English common law, the Declaration of Independence, the Magna Carta, the Bill of Rights, and the wisdom of such men as Locke, Mill, and Jefferson. These sources teach the same great truth, that property rights are the basis for most human rights. Take away a man's effective right to own property, and you reduce him to serfdom. Take away a man's right to his own labor power, and you reduce him to slavery. So, we didn't solve the problem via Route 1, the private property way. Instead, we turned down Route 2, to each according to his need. Now, labor's need at that time was obvious. What labor needed most was more purchasing power. And it never occurred to us that the way to provide it might be through labor's ownership of some capital. Instead, we tried to provide it through wages and benefits alone. We strengthened labor's position with unemployment insurance, strong unions, coercive bargaining, with strikes, fringe benefits, the closed shop, etc. All of it backed up by big government. And in the process, we managed to push wages far, far above their competitive fair market value. We then levied a double tax on the wealth produced by capital. We took half of it at the corporate level. And then we took half of what was left at the individual capital owners level. We abandoned this principle of private property, the concept that if you own it, you should get what it produces. We then used big government to redistribute income. We took from the capital owners and we gave to the non-capital owners on the basis of need. And it never dawned on us that if we could broaden the ownership of capital so that everyone could be a capitalist, all this massive redistribution wouldn't even be necessary. Thus, we turned down Route 2 some 30 years ago, and we are still traveling down it today. Here is how we now distribute the wealth or income to the owners of capital and to labor. In terms of actual contribution to the gross national product, We estimate that capital now contributes about 90%, while labor contributes no more than 10%. But despite capital's major contribution, capital's share of the income distributed is squeezed down to about 22%. And even this squeezed down share gets squeezed some more. First, the corporate income tax takes half of it. Then the personal income tax takes up to half of any dividends paid to the stockholder or the capital owner. On the other hand, despite labor's minor contribution, labor, including the unemployed, gets back about 78% of the income distributed. Why? Because the earnings of capital are diverted to labor through coercive bargaining and the wage guideline policy. This is the yardstick which automatically gives to labor all of the production increases which are actually made not by labor, but by the increasing productivity of capital. All this works out to give labor and the unemployed more than 3/4 of the total income, not on the basis of what labor produces, but on the basis of what labor needs. Thus, we socialize about 3/4 of the wealth produced by capital. Now, after some 30 years of this kind of distribution based on need, how are we doing? Well, we still have chronic unemployment, despite an extra 10 million or so whom we keep busy producing non-economic goods on the military and space payrolls, plus an additional 7 million more on government payrolls, about half of whom are engaged in redistribution, plus another 2.5 million kept on the farms producing surpluses under government subsidies, plus another couple of million kept in make-believe jobs through make work, spread work, feather bedding, and the like. We estimate that if all the phony jobs were wiped out tomorrow, unemployment would be at least as bad as it was in the depths of the Great Depression. And we still have no answer to automation. As we said at the outset, we still have persistent poverty, despite our so-called affluent society. The average annual income for U.S. families ranges from about $13,000 in the top 1/5 down to about $1,300 in the bottom 1/5. Thus, some 20 million of our families, or 1/3 of the total, are still below the official poverty level. We now have a consumer debt of $264 billion, which is 10 times as big as in 1929 and no end in sight. Incidentally, the installment payments on this whopping bill now absorb 1/5 of all personal income after taxes. We now have a public debt of $355 billion, which is 12 times as big as in 1929 and no end in sight. And even more frightening, we now have a total debt, that is consumer debt plus public debt, which is growing at a rate of 7.2% per year, while our population is growing at only 1.4% per year. In other words, our total debt is building up 5 times as fast as our population, and no end in sight. We now have big government, which intrudes its tentacles into every corner of our lives, a government several times as big as in 1929 and no end in sight. Those of us who were here in 1932 may recall that we turned down Route 2 because we were persuaded that human rights were more important than property rights. So With this in mind, let's see how the average little human guy has been doing. He has problems. He owns no capital, so his only income is a job. He is scared of losing his job. He has a low income. The average is about $6,700 per year. He can't afford to retire. He can't afford to educate his kids. If he could, he wouldn't need federal aid to education. He has little or no savings. He's deep in debt. The chances are, to make ends meet, that he moonlights on another job, and maybe his wife works too. To the degree that he depends on unemployment insurance, Social Security, Medicare, and the like, he is a ward of the state. And down the road looms the threat of automation. By contrast, suppose 30 years ago we had solved the problem by staying on Route 1 and broadening the ownership of capital. Here's how this same little guy might have fared. First, as a capital owner with a substantial second income from dividends, he would have some economic independence. He could afford to educate his kids. He could afford to retire on his stock dividend income. His total income would be higher, so he wouldn't need two jobs to make ends meet. He wouldn't need to be deep in debt. He would have some savings in the form of stocks, and he would have an answer to the threat of automation. In our modern industrial society, in which most of the wealth, that is, the useful goods and services, is produced by capital, economic justice depends on these three principles: distribution, participation, and limitation. Like a three-legged stool, all three are essential. No two can stand alone. And here they are. First, distribution. The basic concept of private property says that you are entitled to receive all the wealth your property produces, whether it's produced with your labor, which you own, or with your capital, which you also own, or by a combination of both. In other words, if you own it, you should get what it produces. Conversely, if you don't get what it produces, you don't really own it anymore. Second, participation. The concept of equal economic opportunity says that everybody is entitled to participate in producing wealth, either through their own labor or through their ownership of capital, or both. And if capital is now the major factor in producing wealth, then everybody should have a chance to own some capital. Third, limitation. If everybody is to have a chance to own some capital, then we cannot allow all of the newly formed capital automatically to flow into the hands of the upper 8 to 10% of families who already own all of the existing capital. We must devise ways and means for this newly formed capital to be acquired by the other 90% of families who now own no capital. So much for the economics behind the plan. Now we turn to part 2, how it works.